Hey Sim, since I don't know who you are, send me an email or resend it right now so I can get to it this morning. Let's go! Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small. Stay humble, focus on the long term, and never risk money you cannot afford to lose. Welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis. Yeah, you can ask questions, get involved, let me know what you want to trade. You're the boss. I am a humble servant. Forex.Today is a collaboration between Traders and Traders Way. Yeah, match made in heaven. So together you have amazing analytics and now even signals, which is a big deal, and execution. Yeah, cheaper, faster, better. So definitely a match made in heaven. We got a lot going on in this shortened holiday week. Markets are moving, particularly over geopolitics. Hey, my name is Wayne. Nice to meet you. Now, I'm a little bit tardy, even though I've been up for many hours. We're starting late, right before we got going here. My sound card blew up, I guess. So I did a Windows troubleshoot, and then they're like, hey, you should probably update your sound driver. So I did that. Rebooted. Nothing happened. Okay. It said, well, if that doesn't work, delete the driver and reboot. So I did that. Nothing happened. I have no sound. But you can hear me, so that's a good start. Good enough, I guess, but I can't hear things like the squawk or Aiden's update. Boo! But anyways, let's take a look at what's going on in the world. S&P 500 back above 75.00. VIX, oh my goodness. So good to see it well below 17. Bitcoin kind of flat, not 75, not 80. Gold, 4,500. Again, we've been here for a while. I'd like to see that over 5K. That would be risk on. Look at oil. My, oh my, WTI, 92 and change. Yeah, not 102, bro. 92, which is interesting. So does that mean gold is going to go to, up $250 today? Does that mean Bitcoin's going to go up 3,000 today? I don't know. Dollar at 99 ain't bad. Hey, a month ago we were at 100. Yeah, I'd rather see it at 98 than 99. But, we'll see what happens today now that New York is opening. And we're still above 4.5 on the 10-year, which means we're pushing 5 still on the 30. Looks like we got some con coming up. at 10. Crypto today, Bitcoin, Ethereum, XRP face increasing selling pressure as imminent U.S.-Iran deal seems unlikely.
Gold slips is market's way, renewed US-Iran escalation amid ongoing negotiations.
US dollar index. Upside risks extend as growth outperforms. BBH. US dollar index flattens around 99 position ahead of US markets opening after long weekend. Euro pound price forecasts. Euro remains on the defensive with 0.8640 capping gains. Investing live European FX news wrap. Hopes for US-Iran deal remain high.
Global oil price gains 2% as US military strikes on Iran add to peace deal uncertainty. Oil, extended Hormuz disruption reshapes energy outlook. Rabobank.
Okay, I guess that's
Indian rupee, gradual stabilization prospects after
done.
oil shock. ING.
I guess that's done. I couldn't hear a word of it, but I believe you could, and because I could see it on the stream. Okay, cool. So you heard that. You got updated. I had to read it with my brain. Yeah. All right. And let's take a look at what you stink right now about risk. What is your market sentiment? A little bit risk on, little bit risk off, a little bit very risk on. Okay. Yeah, mixed bag, but I guess we could say 50% of you, actually a little 60% of you, are risk on. Okay, fine. Let's take a look. Right now, as America is waking up, we are looking at, neutral on the daily score. But bear in mind, the market in New York hasn't opened yet. And we've been closed for a while because of the Memorial Day holiday. But generally, risk on, and look at the improvement over the last few days. We've gone from 1 to 5 to 4 to 4.5 to 5. Now we're pushing 6. So we are in a risk on trend. Very cool. Okay. Led by a 13% decline in VIX over the last 30 days. Nice. Okay. So daily up, weekly up, or I should say on. Daily on, weekly on, monthly on, overall on. So yeah, I would join the on group. For those that are off, okay, I can see that. Because you're probably worried about the geopolitical risk. And also, notice the headlines don't seem to represent what is actually going on. The headlines seem very doomsday. And that the headlines seem to reflect more of a collapse in peace talks. But the market doesn't seem to believe that. So for those that put risk off or even very risk off, you might be using the news too much and not enough facts. I'm not to say that you're wrong. I don't know if you're right or wrong, but I am reading the market. And what you think and how you feel is irrelevant. This is an assessment of what the market is doing. And that's different, right? So you're not trying to outsmart the market. You're trying to read the market so you can trade with the market. And maybe maybe the risk off folks are correct. And by the end of today, this is a big fat -2 or 3. And that's a big drop from, flat. But right now, there's no quantitative way to confirm that. Like, oil has dropped 17% in the last week. That's risk on. NASDAQ is up 10% for the month, almost 2% for the week. You know, like, no matter how you feel, this is risk on. And that's what I'm trying to move you toward, okay? And for those that are very risk off, you might be right. Like, again, I don't know the future, but I know you are very much not aligned with the rest of the market. And you are standing in front of a freight train. And I don't know how you get there. It's a guess, or maybe some YouTube guru or something like that. Okay? So just remind yourself, we're trying to line ourselves up, not beat the market. So you might be right, but you're not right now, according to institutional investors. I must remind you that our goal here is to figure out what the institutional investors are doing and then go along with them. Essentially, we want to trade like we're institutional investors. Yeah. Now, they spend many millions of dollars a year to make their decisions. We just track them, let them spend the millions. We'll track them and do what they're doing. So would you like to trade like you have $100 billion in the bank? Well, that's what TradeRs does. Cool. So there you go. Dems to facts. Neat glitch. Did this to me earlier. Interesting. Yeah, we'll keep going with it. Yeah, I'm playing around with the back end and trying to create a for those that know, like a CSS template. And part of that was organizing the colors, and then to show that he's doing it right, turn it to grayscale, and then turn it back on. So somewhere in the linking, he's right. So anyways, this is by design. In fact, I can fix this. Let's see if it'll stay there. There you go. Oh, wait. Wait. Jim, you have the grayscale? So some of you guys have grayscale. Okay. That's easily remedied. I just have to figure out how to easily remedy it. I know what to do. The question is where to do it. Yeah. Cool. I'll figure it out. All right. Yeah, well, that's about right. Yeah, we'll get that figured out. Yeah, I thought I took care of that, but I guess not. All right, so we're looking at the synthetic. So again, for those risk on or risk off folks, I want to point out that this is similar but different math. We are looking at VIX. Let me show you this. We're looking at VIX. VIX down is good, VIX up is bad. Because it is a measure of hedging by institutional investors, and they only hedge when things are bad. They don't hedge when things are good. Okay? Okay. Then we do the correlation coefficient analysis over in our fundamental section. And we actually watch what moves up and down with VIX. So even though we're only showing you 1, 2, 3, 4, 5, 6 things, we're actually measuring about 72 things. 72 things. And we're saying, well, what is moving with or against VIX over the last 90 days? So it's always updated, 72 things over the last 9 days. Pearson correlation coefficient to the VIX. And then we only look at the things that are correlated with VIX right now. And then we look at what those things are doing up or down. So it's quite different than the risk radar. Okay. And like I said, 72 times 90 times, anyways, it's hundreds of calculations are made over and over and over and over and over again. And based on the Pearson correlation coefficient with our main measure of risk, right now it's risk on. And this is like real time. It updates over and over and over and over throughout the day, not just like once a day kind of thing. Okay. So this is another way to look at it. Now, this is technically, the risk radar does a lot of fundamentals. It's reading the spreads and yield curve and stock market. Well, we measure that there, but, let's just say a lot of things. And this is doing different math, and it says, hey, no matter how you feel or whatever you read, right, on your favorite blogger, right, or whatever your favorite YouTuber, or whatever CNBC, Bloomberg, Fox News, or CNN have told you, this is what the institutional investors are doing right now. They are risk on. Doesn't matter what everyone else says. Okay? This seems to be a situation in which if things are bad, they're buying a dip. Okay? Yeah. For example, Ferrari was down 10% today. Then it was down 9%. Then it was down 8%. Then it was down 7%. Then it was down 6%. It's probably only down 4% now. So somebody bought Ferrari cheap. So if today was a down day and yesterday was a down day, let's say, well, what's happening right this second is institutional investors have bought. Not just an it, but looking at everything. Cool. Con. CPI out of Australia. Well, if we have. I'm going to delete this one. Okay, I'll get you some more history. RBNZ. Okay, interest rate decision. Yeah, that's okay, Sim. It's only colors. I'll get that back. Housing starts out of New Zealand. Is that right? No, out of Japan. So it's interesting that it's even there. I don't know if I have that. Do we even care? No, I'm going to pass on this one. European consumer confidence. Okay. Well, we got the data. Inflation expectations out of the Eurozone. Do I care about this? No, I'm going to kill that. Consumer confidence, we did. Weekly claims. Oh, shocked. I'm shocked we should have more data than this. And is it even doing it right? 186%. What the hell is he doing? Yeah, for some reason he thinks these are percentages. And then what the heck is that? Yeah, 210 versus 1,000. All right, he's mixing up his data set. So I have to teach him. This is the funny thing about AI. You're like, well, isn't this straightforward? No, I have to actually teach him what initial jobless claims is. And he needs more data from the Fed. And so the Fed must be sending a mixed data or a mixed data set. So we'll have to investigate the data sets at the St. Louis Federal Reserve Economic Database and blah, blah, blah. Or the Bureau of Labor Statistics, I try to go to, like, instead of going to the Fed directly, I like to go to like the BLS directly because the BLS sends out the data to the Fed or to the Fred, I should say, and I like to have direct access. So in this case, I get this from the Bureau of Labor Statistics. Personal spending, okay, all of that is part of this PCE. And it's doing month over month, and it's supposed to be doing year over year, but that looks like year over year. So this is year over year, correct. This is not. See, I have to teach him. Core, I don't care about core. He's supposed to know that. Got some building permits coming out. Yeah, so I am shocked that he didn't pull the history on these things. He's supposed to. So we'll get all that pulled for you today. So we got a nice little week shaping up here. So, what do you think of this update? A little more traditional. So we got GDP, which is good. Durable goods, but we don't need the X here. UK GDP twice, or US GDP twice. Both are correct in the time. 3.6. Okay. EIA reporting on Thursday this week, I'm assuming that's correct. Usually it's Wednesday, but Monday was a holiday, so could they push? Yeah. Let me get rid of X transportation for durable goods. So inventory, some consumer confidence out of New Zealand, sure. Japanese CPI, sure. Japanese unemployment rate, sure. Japanese retail sales, sure. That's good. Consumer confidence, fine. We'll take it. Canadian GDP, annualized. I'm okay with that. Trade balance. Okay, it's a preliminary. It's fine. Chicago PMI. No, we don't need Chicago PMI. Get out of here. New Zealand building permits. So what do you guys think of this layout? Is there really nothing on Wednesday? Oh, I'll have to check that out. And a countdown ticker. This is more traditional. Yeah. Now, I prefer the radar version. Yeah, I imagine macro. Sven says there's tons of stuff on Wednesday. I imagine that to be true. You're like, no, the world took. That's funny. No, the full analysis. Yeah, the world is not taking Wednesday off for sure. So I agree with you. I'll put that on the to do. Okay, so this time it behaved properly for me. Okay. No, I agree with you, macro. Mm. We'll see if that's true. Oh, looks like it might be. All right, contrarian. We're very tight. Oil way down. Nat gas up. Everything tight. That's tight. So what we want to see is everything to the right move up, everything to the left move down. And we're kinda there. It's plausible. If you drew a trend line here and a trend line here, you would see it's generally, but only slightly going in that direction. But you want to watch this throughout the day. Okay, so if oil's down, you would expect Aussie yen up. You would expect the Dow up. Yeah, for sure. S&P 500 would be up. I think even gold would be up. Cool. So right now everything is tight. And that's not a good thing. That means we've been coiled like a snake for actually, about 3 weeks, haven't we? So over the last 3 weeks, it hasn't paid to be a heavy trader. It's paid to be a cautious yet bullish trader. And that's what the risk radar has been saying. Dude, today you're neutral, but in general, you're bullish. So, go long, but go slow. Well, both macro, but there's a logical reason for like a stagflation or Goldilocks type scenarios, and that is more of a zeitgeist narrative than often reality. But I mean, in a way, you could assess a scenario in which the daily risk is neutral, but the longer term risk is risk on. And you can say, well, that's stagflation, not in a traditional sense. Like stagflation is, zero or negative growth, and yet prices are going up. Well, that's kind of Canada. Uh, Canada has high wages and low productivity, and that doesn't even make sense to me. You got lazy workers, but they demand lots of money. No, I know that's not fair, and Canada just got pissed off at me, but they're grumpy over the Canadiens and the Oilers, not me. But a Goldilocks scenario of, flat inflation and some slightly, and growing GDP. Yeah. But the thing is, we can see that in the data. Okay. And so that would be an interpretation because most of the time when you start hearing about this stuff in the media, it's so remote as a possibility. It's like you don't want to go golfing, or let's say you're warned by your local news outlet to not go golfing today because you might get struck by lightning. And you're like, dude, but there isn't a cloud in the sky. It's beautiful. It's sunny. Like, what the heck? And they're like, yeah, well, lots of golfers die every year by getting struck by lightning. And you're like, yeah, I get it, but if it's cloudy or starts raining, I'll walk in the clubhouse. But dude, it's possible, but not likely. Then they say, well, there was a report, back in 2022, John Smith was golfing on a summer day, but there was a storm 50 miles away that couldn't be seen over the curvature of the earth, and somehow a lightning bolt went through the atmosphere and struck him dead, even though it was a sunny day, not a cloud in the sky. And you're like, okay, how many times does that happen? Oh, it's happened over a dozen times over the last 1,000 years. So you're like, okay, very low probability of being struck by lightning during good weather. Okay. What I'm trying to track is, and by the way, that's the stuff that sells media, right? Just think of the media now as clickbait. And what I'm tracking is none of that. Like someone was asked me the other day, like, so do you, how do you keep up with your news? Do you use this site? And I'm like, no. Do you use that site? No. Do you use this other site? No. Do you watch this channel? No. How about that channel? No. Do you watch this YouTuber? No, I don't watch. I don't watch any YouTubers. They're like, well, how do you know all the? I'm like, well, I just have the facts. I just read the news. Like I actually read the reports and the releases. I have access to all the data, and I'm tracking institutional flows and real-time valuations. Like, I don't know what everybody else thinks, but when I accidentally enter society and see what is going on and what people are saying, I reject it most of the time. So if there truly is a stagflation or a Goldilocks scenario, we'll see it inside of the data. And it would be something that I'll talk about. So you can listen to the guy on TV. Let's say he's on CNBC or Bloomberg, and he's babbling on about stagflation. Okay, great. That might sell his book. It might get him clients because he'll find people that are also terribly afraid about a scenario like that. Because he'll speak his narrative, but he's speaking to a very small niche of an audience. And in a way, he's like, hey, everybody, I have a hedge fund. So if you're freaking out about stagflation, why don't you come visit me? We can talk about you giving me money, and I will manage you in your money to to handle a stagflation scenario. Cool. Okay, so it's like a press release. We look at much bigger data, trillions of dollars, very, very big institutional flows. And we can see beyond that, beyond the press releases and the pitches, instead of just see what is actually happening. Okay? And to me, that's much more important, macro Sven. Not to say that the other things don't happen, but I'd rather see, well, is the market doing that? Is the market actually worried about stagflation? No. Let me give you a quick example. I hear, like even today in the headlines, oh, so-and-so said that the Fed could raise interest rates. Okay, the Fed could or will. Ooh, that's interesting. Why did that go? What the heck, Aiden? Really? Or is it just my system being slow? Yeah, it's my system being slow. Yeah, okay. What was I going to say? Oh, the ECB, right? Oh, the ECB. No, the Fed. The Fed's going to raise interest rates. Okay? So-and-so said the Fed's going to raise interest rates. Okay, let's take a look. Yes, we're in grayscale. Don't freak out. Okay, we're currently at 3.75. So what would be a Fed interest rate hike? 4.0, right? We get to 4.0 May of next year. We might hike around June. Wait. This is out of October. July, September, October, December, January. Okay, this is right. January, maybe. March, more maybe, probably. May, yes, that's priced. So we have the fear mongerers that say the Fed is definitely going to raise interest rates soon. Well, what the market believes, not what some idiot said on TV. Everyone has their right to an opinion. I don't have an opinion. I have the facts. Do you want my opinion or do you want the facts? So, when you look at trillions of dollars of investors investing, each one of these is a large institutional investors that spends many, many, many millions of dollars a year doing their analysis and research. So the sum of maybe $1 billion worth of research and trillions of dollars of cash actually flowing in and out of these assets, there's a price rate hike in the first quarter of next year. I'd rather someone, so if I was on CNBC or Bloomberg, I'd say, like, look, I'm tracking the market. I can see what institutional investors are pricing in based on our quantitative analysis. And it's the market's opinion right now that they are pricing in, as of today, a rate increase by 25 basis points in the first quarter of 2027. Okay. Did you notice there's even a slight pricing of a cut. Now, it's not really a cut because it has to be at 3.5 or lower, but the way it's priced right now, this is because there's a range, right? An upper bound and a lower bound to the Fed fund futures market, right? They say it's between 3.5 and 3.75, which is 3.68. That's the mean, the median. And that fluctuates a little bit all the time, meaning if it gets too low, the Fed pushes it up. If it gets too high, the Fed pushes it down. And so right now it's a little bit low, and they could push it back up. So, okay, let's do this. Basically, let's say 93% chance, no cut, no raise, I should say. Okay. 25% of a hike, 30% of a hike. Remember, 75, no. I should have them actually reverse this, but anyways, you should be able to reverse it yourself. 75% no hike, 70% no hike. Okay. 84% no hike. So we get to December, and it's 66% chance no hike. You see what I mean? And that's the difference between opinion and fact. Okay? Lots and lots of very smart, informed people managing trillions of dollars do not think what the knucklehead on TV is talking about. The guy on TV is just trying to raise money, selling his opinion, and try to attract people with fear. Yeah. Okay. Cool, right? Look at the cuts at the end of the year. I'll have to double check if that's even correct, but it makes sense. Cut, no cut, cut. Yeah, dude, that's pretty cool. I mean, it makes sense. It's so far out, I want to double check it, but money is going into these assets. And the people making these investments have done all their analysis and have done, like, let's say, the time value of money calculations and put in their assumed or implied interest rates at those times based on their own models, and therefore then price the value of these treasuries. And based on what they paid for the treasuries, we can derive what the variable was that they agreed on. Okay? But this is a shocking drop. So somehow this doesn't seem correct. So one hike and then pause, right? So this is probably a mistake. Or it's so early in the investment that it hasn't picked up enough money yet. It's selling super cheap. Cool. Whatever. We'll figure it out. So this is what I'm trying to get us towards, where we're not guessing. All right. Isn't that cool? So Tradars is free. I hope you know that. Cool. Has anybody been using our signals? Has anybody been using that tool? Do you like our signal cards? Right on. Yep. So right now, look at all the things moving. Aussie Kiwi up, Aussie Swiss Kiwi up. Sorry. Aussie Kiwi up, Aussie Swissy up. Euro Kiwi up, pound Kiwi up. What do you think? Is Kiwi weak? Aussie is strong, Kiwi is weak. You see? Here's all the bearish stuff. There's all the neutral stuff. So, to simplify it even further, okay, here's the quality. So you want to look at the top. Aussie CAD is barely a decent trade. But 1, 2, 3, 4, 5. I'd probably even ignore USD Swiss franc. I'd go with pound Kiwi, like, because look at the percentage. That's what we're looking at. So put these 4 on your to-do list for considering buying dips today. These are okay. Looks like we're selling Kiwi. So put these 3 as moderate trade opportunities to sell today. So now you're going to go to your charts. These are not quite up and running yet. These are flat as can be. There's a slight edge here, but nothing that great. Okay? And so you can just sit on these guys. Just sit on this. This is where you start. So, selling Kiwi, huh? Let's see how that works. Selling Kiwi, they say. So, the best trade right now for you, if you were going to sell Kiwi, is Aussie Kiwi long. The second best is Euro Kiwi long. Third best is pound Kiwi long. That's it. That's all there is. So what are you looking to do? Buy dips. Now do your technicals. Now, these charts are based on technicals and fundamentals. Technicals and fundamentals. Dude. The other ones are just technicals. This is technical and fundamental combined. And you're like, but Wayne, it's just a couple of moving averages. No. I just removed tons of stuff. It's using oscillators. It's using, so like, for example, it's doing MACD calculations. It's doing pivot point calculations. It's doing price action. Dude, a lot's going on here, plus the fundamentals, right? So whatever, bro. So you look at this and you're like, these are the three best opportunities for selling Kiwi right now. So now go to your chart. And now you can do what you do. Okay. It's coming down there. But you're, what did we want to, Aussie Kiwi? Okay. Cool. Look at this, man. Okay. Look, there's your 5 minute chart. Are you finding opportunities to get long? You should have been doing this all day already. Another way of looking at it is I'll go to my price action. Okay. The the gray box is when I anticipate the move to start. Look at the consolidation for hours. Then it gets into my box and takes off. Yeah. So anyways, just look at this 5 minute chart. Just all day since Asia open. Up, 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 down, down, buy, up, up, down, buy, and then consolidation, London open, up, up, down, buy, up, down, buy, up, down, buy, consolidation, New York open, up, down, buy, up, down, buy. Like, you don't need me for that, right? You can buy dips, right? Let's change this to uh, uh, okay. This how should I draw this? I don't have my lips. Anyways, the gray box is Asia open. See, labeled Asia, I think it said. Okay, Asia open right here. This box is London open. This box is New York open. 15-minute chart. Cool, right? Right? Buy a dip, buy a dip. So it's just moving along, guys. Hey, guys, got a good deal for you guys. Quid pro quo. All right. There you go. You can just sit here now. Those are three of your opportunities. What were your other opportunities? Do you remember? Well, I asked you to create a list because now you just pull those up and sit. Okay. You either sit on this because you like to look at the chart version, or you like to sit on the signal card version, or you like to sit on whatever we call this, the column version. Okay, mediocre, 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 mediocre. A little better, little better, much better, much better, much better, amazing. Okay, pretty good. Yeah, okay. Pass on all these, and definitely pass on all these. Like, watch these for later today, but pass on all these. Don't even look at CAD yen. Don't even look. I don't know. Pretty amazing, right? Yeah. And I started the process over the weekend of bringing back the rebate program where I narrow your spread by giving you some of your spread back to you in the form of cash. Yep. Well, also in that offering, I just, right? I will give you the, right? I will also give you access to the equity boost. Would anybody here like an equity boost in their trading account plus being paid a cash rebate from your spread? Yeah, I have a solution for that. Aha! So in that sign up process, it'll ask you, are you in the United States or international? So I have a U.S. solution for you. Cool. Yeah. Cool. So an increase in trading equity and a decrease in spread. Does that sound fine? Everybody okay with that? So imagine like you put in $5,000, but you have 25,000 in equity. And at the end of every single day, some of your spread that you paid gets put back in your account as actual cash. Well, can I do that? Well, I'm the boss. Yeah. But Jim will recall the cash rebate for your TradeR's account. And that wasn't a success, basically. So, but as far as me just giving you some of your spread back, and if you want an equity boost, can I give that to you? Yeah, I can do that. Yeah. So let's just simplify it, right?